Greetings, ladies and gentlemen. My name is Dr. Robert Mugo. I am an academician, a CPA, and a financial analyst. I want us to continue with our series about borrowing. Today we shall talk about borrowing from Saccos. Saccos, as the name means, is Savings and Credit Cooperative. So you need to save so that you can take a loan. What do you need if you want to take a loan from a Sacco? You must be a member first. You must be an active member. By being an active member, it means you must have the share capital. This one varies on the various Saccos that we have. That is non-refundable. You can only transfer it. You must have share deposits, what we call non-withdrawable deposits. You must be active in that Sacco. So it means on a regular basis, you have been depositing money in your non-withdrawable deposit account. Maybe most of the Saccos will need you to be a member for at least 6 months so that you can qualify for a loan. The next item that we shall talk about, for you to be able to take credit, you must be somebody who is qualified to take a loan. Qualification here could mean you have an income or you have a business. The third one, as you get this income, you must be able to guarantee or to secure this loan. Security here could be through guarantorship or could be through the use of a collateral. If we want to talk about now those with a payslip, you want to take a loan from a Sacco, you need certified payslips from your employer for at least 3 months, and then the 1/3 rule is followed. You can't take home less than 1/3 of your basic pay. They will also consider the number of years you have in service. If you are 58 years, you can't take a loan of 5 years if your retirement period is 60 years. The next item that I want us to look at, you are borrowing from this institution and you have a business. In case you have a business, you will need to show that your business is able by liquidity, that it could be your bank statements, or if your business money goes through the Sacco, how has been the flow of your business income in the Sacco. You will also need to confirm or to assure this Sacco that your financial statements are correct. So these ones could be audited financial statements. You can also give financial projections for the next 3, 4, 5 years. That is the part of borrowing from in the aspect of income or salary. The next item, I talked about guarantorship and collateral. If you want to borrow from this Sacco, you find most of the Saccos will require you to have guarantors. If I'm borrowing 1 million, I need to have people who will guarantee me 1 million shillings. You know, the Sacco fraternity is a very unique one because the owners and the borrowers happen to be the same. The investors, borrowers, and owners are the same. So you need people to guarantee you. In case you do fail to pay, they will come and cater for that. You can also do self-guarantee. Take, for example, I have deposits worth 800,000 and I need a loan of 500,000. Those deposits that I have not guaranteed anyone. If I have not guaranteed anyone, I can get in most Saccos up to 90% of my deposits. Say I have a deposit of 800,000, I can get 80% of that, which is 720,000. In this case, you can also use a collateral. A collateral here could mean I want to take a loan of 500,000 I have a logbook, I have a vehicle, I have a parcel of land. This is properly charged. Not just bringing the title deed or bringing the logbook. It is properly charged. It is co-owned by the Sacco and you. Then you can take this loan. The other aspect I wanted us to learn about Saccos, they have both what we call FOSA, front office savings account loans, and back office savings account loans. Most of the normal loans, most of the long-term loans that need collaterals and guarantors are back office loans. Front office loans, if you are an employee of institution X, you can just go, depending on the various types of Saccos, you can take a loan without a guarantor. Maybe you take a short-term loan for 6 months, for less than 1 year. Those charge their own interest category. They are slightly more expensive than these other back office loans because they are not secured. The back office loans are, the most common one is called normal loan. When you want to get a back office loan, they use the multiplier. You want to borrow a loan of 300,000. What is the deposits that you have, then unwithdrawable deposits that you have? Most of the Saccos allow a multiplier of 3 times. Some allow up to 5 times, and others allow up to 10 times. The one that is that allows the lowest multiplier, you find it is the cheapest loan. Like the normal loans, they charge an interest of 12% per annum, which translates to 1% per month. Here you just find for normal loan, most of them is up to 48 months. For the longer term loans, there are some loans that go up to 96 months, others even up to 120 months. These ones are, because of the duration, you know the risk is higher, it is slightly more expensive than a normal loan. Here, most of the Saccos give loans up to 15% interest. One thing very unique about Saccos is that in as much as you pay interest on your deposits, you will also have a return on your deposits. At the end of the year, they will compute and give rebates on your deposits. So we can continue learning. Remember, I told you that this is a series about borrowing. So today I want to stop at that for Saccos. We shall continue learning. You can go to my channel, Dr. Robert Mugo, on Instagram, on Facebook, on TikTok, and on YouTube. Enjoy your Sunday.